Hello and welcome to Let's Talk Business, a show that gets you a wrap of all the big business stories. And starting with markets. Markets snapped a two-day losing streak to end in the green after a volatile day of trade. Realty, Pharmaceutical and PSU banking sectors rose. FMCG and IT shares were under pressure. Alex Matthew with a wrap of all the market action.
Indian equity markets gained ground, the Nifty 50 gaining about 0.2%. It traded in a range of just about 110 points and it ended around that midpoint of that range. And that's primarily because there was a little bit of lost ground towards the end of the session in the last half hour or so, because Reliance Industries dropped quite precipitously, about 1% or thereabouts. Reliance Jio Financial Services as well as Reliance Industries were the worst performers on the benchmark Nifty 50, and that's probably because a lot of the expectations around that AGM, there were expected to be quite a bit of strategic announcements. Now, none of them panned out. Let's talk about the other aspects though today. You had most of the sectoral indices gain ground. You had the financial services as well as the Nifty Bank that were among the top performers. On the other end of the spectrum, you saw IT as well as FMCG lose ground. HDFC Bank, important to note, gained about 1% and was a bolstering force for the benchmark Nifty 50 as well. The top gainers then, you had Power Grid, Larsen & Toubro, Cipla, M&M as well as BPCL. And among the losers, I already mentioned JFS as well as Reliance Industries. You also saw Adani Enterprises, Hindalco, Nestle and Titan lose ground. The broader markets, as I pointed out, gained quite significantly, in fact better than the benchmark index. And you had a few names that stood out. You saw RailTel that gained about 16.5%. There's news that the company is expecting 4,000 to 5,000 crore rupees of revenue from the Kavach program. You saw Bharat Forge that ended at yet another all-time high, gaining about 2.5% or thereabouts, as its JV got a 287 odd crore order from the defense services. You saw Piramal Enterprises that gained close to 5%. There was expected to be some announcement with regard to Jio Financial Services, but then on account of a buyback announcement, the stock has gained ground. All told, we've kind of underperformed the Asian peers and in fact the global markets, but it's par for the course and we have stayed close to the 19,300 mark. We'll have to see if there is a decisive breakout in the near future.
And moving on, amid global economic headwinds, can Indian economy fare better than its peers? Well, how will India's economic growth be in the coming years? Taher Badshah of Invesco Mutual Fund is optimistic about India's economy. Listen in.
Our view, at least over the last 2-3 months, has been that we are getting into a phase where India can probably deliver a reasonably decent and robust economic growth cycle compared to what it has seen in the prior for 5 years. And I think we are holding on to that view even as of now, despite some of these new angles which have developed in the market today. We think that the investment cycle has been strong and probably has legs to continue to maintain strength. So 40% of the economy by and large is taken care of. The 60%, which is basically the consumption part, is something that we've begun assuming that this is, while it is weak or probably has mixed trends, but it probably has the ability to strengthen as we get into 2024, if not 2023. And I think we're still holding on to that view, despite the fact that monsoons have not typically moved up or have not come up to expectations. So I think in general, I think we are holding on to a reasonably positive view about the markets. While you mentioned about the fact that there are pockets of the market which are a little concerned about valuations, and I agree with you that there are certain pockets which are somewhat overextended and we need to kind of tread carefully in some of those pockets. But there is a fair bit of possibility of some of these pockets also showing up earning surprises.
And in other news, Reliance Industries held its 46th annual general meeting today. A whole host of announcements were made, ranging from launch of Jio AirFiber to Jio Financial Services future path. Well, Reliance has put a firm succession plan in place as well. Isha Ambani will join the board and Akash and Anant Ambani will be on the board of directors. Listen in to some of the key highlights and takeaways from the announcements of the AGM.
We began our 5G rollout last October. In just 9 months, Jio 5G is already present in over 96% of the census towns of our country. And we are on track to cover the entire country by December of this year. This makes Jio 5G the fastest ever 5G rollout of this scale anywhere in the world. Today, nearly 85% of the total 5G cells operational in India are in Jio's network. At our current pace, we are adding one 5G cell to our network every 10 seconds, and we will have nearly 1 million 5G cells operational in our network by December. Our extensive optic fiber presence puts us in close proximity to over 200 million premises across India. Yet, providing physical last mile connectivity is a painstaking process in most parts of our country. This leaves millions of potential customers without home broadband due to the complexities and delays involved in extending optical fiber to their premises. This is where Jio AirFiber, our fixed wireless broadband offering, comes in. Jio AirFiber uses our pan-India 5G network and advanced wireless technologies to bypass the need for last-mile fiber. Today, I am delighted to announce that Jio AirFiber will launch on the auspicious occasion of Ganesh Chaturthi on 19th September.
Jio Financial Services bring digital infrastructure and capabilities and local market knowledge, and BlackRock brings global investment and risk management expertise. Together, we will aim to transform the asset management industry through a digital-first offering and democratization of access to affordable, innovative investment solutions for millions of investors throughout India.
Dear shareholders, in payments, JFS will consolidate its payment infrastructure with a ubiquitous offering for both consumers and merchants, further driving digital adoption for India. JFS products will not just compete with current industry benchmarks, but also explore path-breaking features such as blockchain-based platforms and CBDC. They will adhere to the highest standards of security, regulatory norms, and ensure protection of customer transaction data at all times. JFS will enter the insurance segment to offer simple yet smart life, general, and health insurance products through a seamless digital interface, potentially partnering with global players.
And well, BQ Prime also spoke to analysts about the key takeaways from the AGM of Reliance Industries Limited. Listen in to Moresh Joshi and Abhijit Bora as they shared their take on the AGM.
Margin profile for the chemical business is relatively better and more stable than the traditional oil business as we are transitioning into renewables, electrification, so on and so forth. The next few quarters, you're also going to see a huge amount of supply coming in from China. And therefore, the kind of spreads that you're probably looking, both in terms of deltas created for the polymer and the polyester chains, that might be a little bit subdued. And therefore, value-added products that will come out from the chemical chain is obviously going to be a huge beneficial impact for companies and the large-scale companies like an Aramco or Reliance in that aspect.
The O2C business would be in the total stock price of say around 2,400 rupees odd. It will be around 700 rupees will be accounting from that. So you can 1,000 rupees maybe for the retail business, which we see there is a possibility of uptick from the recent strategic investment, which is higher than what average street valuation is for this business. So basically, as per the information given by you, there is a undervaluation either on the consumer side or either on the O2C side. So there is definitely something is being not fully factored in the price.
And well, moving now to the centre's bid to control rice prices. And in order to bring prices of rice under control, the centre has imposed a 20% export duty on parboiled rice. Well, moreover, the government is expected to notify a minimum export price for basmati rice pegged at 99,000 rupees per tonne. Well, BQ Prime spoke to Ashish Jain of KRBL and Ashwini Arora of LT Foods to understand the impact. Listen.
I think this is coming on a background of avoiding any possible, food shortage in the country. And, if you look at Basmati, KRBL is, similar impact. So more than 95% of our Basmati export is anyway above the MEP that has been set. So the overall impact on KRBL is going to be very limited. Number two, for the industry as a whole, of course, if you look at EPIDA data, the average realization per ton of Basmati was around $1,100 in the month of June. So sure, so the average is below the 1,200 mark, but then we are really towards the end of the season. So Basmati, as you know, is harvested between October and December. So the stocks peak in December and then the stocks start depleting. So this is the part of the year when more or less the majority of the exports have already happened. So from a timing point of view, minimal impact, but yes, the average currently for the industry is lower, but for KRBL, very, very limited impact.
So parboiled, as LT Food is not in non-basmati business, but the idea is simple, that's a food security. They wanted to make sure that, as we have a sufficient stock to feed our own people. As next year, there is a forecast, there is a 5% deficit they are expecting in non-basmati sourcing. So they wanted to be, ensure that, India has sufficient rice to feed in.
Well, that's all that we have on this edition of Let's Talk Business. Short break now. Be right back.